There's only three tier one investments in the world: stocks, bonds, and gold. You go to 99% of all investors in the US, including advisors. They're shocked to learn that gold is a tier one investment too, but they only really have one or two of those three. They don't have all three. And yet they're told that they really are on par with each other because they're all tier one investments. BRICS are going to be an extremely formidable foe to the United States if they're not already. And they are part of the reason why gold has performed in the manner that it has. And the fact that physical trading moved away from London and the US, where the paper market artificially suppressed it and kept not the real valuations that should have been placed on gold. And now that ability to do that is lessened.
Over the past century, gold has consistently been a beacon of potential stability and a mirror reflecting global economic fluctuations. In value terms of the US dollar, the share of gold in the total foreign exchange reserves increased from about 7.9% as of early April 2023 to about 8.41% as of early April 2024. In this video, the head of investment strategy for a leading New York Stock Exchange member firm, Peter Grandich, advises that gold is gaining Tier 1 investment status worldwide, prompting U.S. investors to consider increasing their gold allocations in their portfolios. At the forefront of global economic shifts stands the Brics alliance, as Peter Grandich asserts its capacity to overhaul trade dynamics worldwide, signaling a wake-up call for Wall Street, which may have underestimated its impact. The dollar's dominance, such as it is breathtaking. According to data from the Bank of International Settlements, about 90% of global transactions involve U.S. dollars, and 50% of all global trade is dollar-denominated. The motives of BRICS countries extend beyond anti-American sentiment. Their efforts to reduce reliance on the U.S. dollar also serve as a form of financial risk management. Regarding the global gold market, Grandich discusses the shift of physical gold trading to Asia, which he sees as a key factor in redefining gold's valuation and reducing the influence of Wall Street's paper market manipulation. Highlighting another key aspect, Grandich emphasizes China's strategic accumulation of gold as a step toward solidifying its economic leadership within the BRICS alliance. To diversify foreign exchange reserves and reduce dependency on the U.S. dollar, China has significantly decreased its dollar holdings since 2011. This shift towards gold aligns with the BRICS nations' objectives. China stockpiled 225 tons of gold, worth a staggering $13.2 billion last year. The communist country has been steadily accumulating gold since 2022, and millions of precious metals are purchased monthly. Now, we present the clips of Peter Grandich's insights from his recent interview with natural resource stocks. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I think they're one of the people behind it. I think when it's all said and done, one of the biggest things Wall Street will have missed, because people assume they're sharp and they always get everything ahead of time and all that kind of stuff, is what is happening with the BRICS and what impact it will have to the United States. I have stated, and I stated it a couple of years ago, and believe every month it gets more reasons to believe it's correct, that when the BRICS reach whatever their peak is or crest, what they have done to world trade will be the same influence the Industrial Revolution brought to world trade. And what Americans don't seem to understand, I think it's because they're not being told, is whatever or whoever these countries are, because right now it's not, they're just a handful of countries, and yeah, I heard there's 40 more, but whatever it is done, that's business that used to be done with the United States and won't be. They are looking not to just partially deal with us, but to deal with us at all, and to work within themselves, and also eventually somehow not have to use our dollar in order to facilitate and do their transactions among themselves. All of those are huge, huge negatives to the United States. And part of the thing, and this is still up for debate, but it's been something I've been clear about, and one of the reasons I've been so bullish on gold is that China, and I think they expect to be not only the economic leader of the world, but certainly the leader of, or the main person leading the BRIC nations, has been an enormous buyer, because they recognize that whatever happens sometime in the future, either the United States will end being the reserve currency, will face a competition, or at the very minimum, the BRICS themselves will have gold in some way on transactions being closed, or at the end of the day, like our gold standard used to be, if one ends up doing more trading with the other after a year, they provide them with a certain amount of gold and so forth. But they want to have gold to be able to say, listen, we're not that paperless tiger known as the US dollar, which everybody's lost so much money in. We have, and part of it is, and gold comes out. So answer your question, the BRICS are going to be an extremely formidable foe to the United States if they're not already. And they are part of the reason why gold has performed in the manner that it has. And the fact that physical trading moved away from London and the US, where the paper market artificially suppressed it and kept not the real valuations that should have been placed on gold. And now that ability to do that is lessened. Just would tell you that I don't think they'll be as formidable or powerful as they once were, but I do think the movement of physical gold trading to Asia was one of the biggest keys for gold to finally start to be more representative and to be priced in a better level than it had been. And yet here in the US, it's still the Rodney Dangerfield. It gets no respect. Wall Street still treats it like kryptonite. But I can assure you that outside of the United States, particularly Asia and even parts of Europe and other areas, people have made gold part of their portfolio. It's an amazing thing, still a little bit in the financial service business and the fact that I'm part of a planning group. But there's only three tier one investments in the world: stocks, bonds, and gold. You go to 99% of all investors in the US, including advisors. They're shocked to learn that gold is a tier one investment too, but they only really have one or two of those three. They don't have all three. And yet we're told that they really are on par with each other because they're all tier one investments. So it's been good to see. It's been finally been good to be validated, especially when in 21, I predicted that gold would outperform stocks and bonds for the next few years. And people, even my wife, thought I was crazy. So the bottom line is, I think the BRICS are something that if you don't know about it, and I don't mean you or your boys, but I think most of America that don't, they're going to learn the hard way of how the BRICS are going to come on the world stage.
In Grandich's view, mining shares, despite their prolonged undervaluation, might not be heavily affected by a correction. While cautioning against hoping for a stock market crash, he foresees robust performance for mining shares, presenting better returns than physical metals in today's market. Gold prices are 14% higher for the year, and that should be able to push up gold miners, though that hasn't necessarily been the case. However, less inflationary pressures on the horizon could eventually push miners higher, thereby increasing trade opportunities. Furthermore, the big players in the gold mining industry are starting to show signs of strength. For example, Newmont and Barrick are seeing strength in a relatively slow start to the second quarter for the broader stock market. Notably, Grandich observes encouraging trends in gold, silver, and copper markets, underlining their significance due to persistent global demand for metals. While acknowledging his tendency to be early in his predictions, he remains optimistic about metal prospects, especially foreseeing opportunities within evolving industries like electric vehicles. Let's get back to the interview.
If a correction started tomorrow, in other words, we open up Monday and gold decides to correct 100 or even $200, I don't think the shares are going to go straight up. They may not go down as much or go down at all because they're so washed out. Only other thing that can keep them from moving fairly nicely up, say over days or weeks, is that we get a fairly sharp and quick correction, which is still not certain is going to happen. But I do think they've been washed out for so long, Andy, over so long of a period of time. Doesn't matter which ones you looked at. Basically, anybody that's left holding them, like me, that for 2 years, they're not stuck at much higher prices. The washout has really brought the averages down. So any return of interest, this is the one caveat also, don't root for a stock market crash. We want things to roll over. We don't want money, just like if I'm not a fan of Bitcoin, I don't want it to blow up and be 10,000 tomorrow. I wouldn't mind if it took 2 years to go back to 10,000 and people recognize what it really is and flow that money into metals. But I think the stage is at least set for the metals now, the mining shares, to do what we used to say on the speaking circuit, and we were proven wrong. We all used to say, even some of the guys and gals that are still out there, we would say this years ago, owning mining shares is just like owning gold. That proved very wrong the last couple of years. But I do think from this point on, the leverage or an opportunity to make larger percentage gains will come from the shares, not the physical metals. I think was able to show my entire record for 40 years. It's been one of pretty one to be proud of.
Sure.
But the thing that was just a blemish 2 years ago grew to a huge growth on the side of my face, because as much as I was right about gold, as much as I was right about getting out of bonds and all that stuff, I also got very involved in mining and junior stocks. And a year ago, when they had already fallen about half of what they ended up falling, back up the truck, they can't possibly go lower. Well, they did. And even at the end of this year, I said, it's no way they can go any lower. Certainly, we began the year again picking up where we left off. But, and hopefully this is a correct but, we now started to see a couple of real good signs. First, the fact that the metals and gold and silver and even copper now are just so strong. And this is important because some people will say, well, maybe they're buggy whips. Maybe their time has passed somehow. Because think back, if you invested in buggy whips up through 1900, as each year went by, less and less, and before you knew it, you were out of business. The difference on this end is not only does the world need metals, it needs metals more than any other time that it needed it. And a lot of years have not been spent looking for it. It's become much harder to find. Grades have shrunk. The areas in the world where you can go with complete safety have greatly shrunk. And so there should be a need for them, even if we're too early. If there was anything said about Grandich over the years, it was that comes from a mentor of mine who taught me years ago, Pete, be 2 years too early, just don't be a day late. So I think part of the turn is the fact that we're recognizing now how much metal's needed. People say, well, isn't this EV story kind of dying? People aren't cars, factors are backing away. Yeah, it's probably dying from what people were predicting 2 years ago, but it's still moving forward and it's still going to be significant.
In recent years, the yellow metal has demonstrated resilience in the face of global economic challenges, including inflationary pressures and currency fluctuations. The accumulation of gold by various central banks, most notably the People's Bank of China, further supports its appreciation in 2024. How do you plan to adjust your investment strategy considering the changing roles of gold, the US dollar, and the Brics alliance in the global economy? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.